We have a $20 billion program with Argentina. As you know, Argentina is a fabulous potential country if only it can get its macro in shape. And this is what we are working towards. We welcome the US helping Argentina. We welcome the World Bank, the Inter-American Development Bank coming with support. Why? Because the size of adjustment that needs to take place in Argentina is quite significant, bringing inflation down, keeping it there, lifting economic activity, bringing poverty down, or complex.
Do you worry that the US bilateral might not have the same conditionality that you would require?
We have been in close contact with US as they prepare their program. Their interests and our interests are aligned. The US is the largest shareholder at the IMF. What we want is to see Argentina staying the course to macro stabilization.
Right.
And sustaining good policies for long enough to then be irreversible.
Let's look at monetary policy. The president wants lower interest rates. The FOMC now looks like to be, well, you know, the whole Lisa Cook business, the whole this and that and the other. Do you think the US warrants lower interest rates at the moment?
What we are seeing in the US is that a labor market is softening somewhat. Growth remains strong, but we expect towards the second half of the year growth to soften. And in that environment, the Fed is right to look at the balance between inflation that is still going down and the potential of the economy weakening to decide on interest rates. We need to recognize that what we worried about, that tariffs can have a very significant inflationary impact, is not happening. The impact is quite mute. And there are three reasons for that, Richard. First, nominal tariffs, 18%, but when you take all the exceptions, the effective tariffs, they're about 9%. So 18 nominal, 9 effective tariffs. Second, it looks like companies, importers, have space to absorb some of the tariffs, at least for now. And three, we need to remember, the US imports only something like 13-14%. Most of what people consume is produced right here.
So then we come to the question of the independence of the central bank, which I know you think is crucially important and would want to reinforce that.
Well, credibility of central banks have served the world very well. When we got into COVID, central banks eased their terms to provide more monetary support for the economy. Then they had to tighten. We have to trust what they do, because credibility is, in fact, like the interest rate, an instrument of central bank impact.
You've appointed a new, I think the title is Deputy Managing Director.
Yes.
Comes from the US Treasury, extremely well qualified. I was reading his CV. Do you worry it looks as though you're doing so to appease the administration?
I will tell you this.
Yes.
We have always had the largest shareholders represented in management. The Europeans are represented in management, the Americans are represented, the Chinese are represented, the Japanese are represented, and we have emerging markets representative. This has always been the case, and I can tell you that I very much look forward to Dan Katz joining us. He will bring new energy and a lot of experience from 3 times of service in US Treasury.
Finally, climate change. There's no getting away from the fact we can slice this any way we like. That there is now a major difference between the view of the United States and the consensus of other nations. How do you square this circle, or do we not?
Look, we are an institution dedicated to macroeconomic and financial stability. When floods and hurricanes and droughts affect macroeconomic stability in some of our members, we have to pay attention to that. And I can tell you, they expect us to pay attention to it.